Welcome back to Derek on Chain here, another video. Bringing it to you, we're talking about portfolios. We're talking about crypto portfolios versus stock portfolios. In the crypto world, this video, this channel, my website, we focus on Cardano blockchain. So everything you're gonna hear me talk about is gonna be on the Cardano blockchain. So if you are a Cardano fan, you're part of the Cardano community, congratulations, you have found the right place. If you are just in blockchain searching, found this channel by random, congratulations, because hopefully something will set you on a path of discovery for yourself, to go down your own research, do your own due diligence, to see whether or not Cardano could be a fantastic place for you to study, not only about cryptocurrency, but about blockchain, layer ones, layer twos. All right. The conversation I get into a lot, for those of you who don't know, the past couple months, I got my real estate license, something I always wanted to do. I think the blockchain industry overall is going to affect many industries, if not every single one of them. Real estate being one of the major industries that blockchain is going to affect with smart contracts, deeds, titles, transfers. I think that there is a bright future with blockchain as it integrates more into society, becomes more adopted, regulated, and all of that. And now in my new real estate world, I'm talking to people all the time, and they ask me what I did before real estate, and I talk to them about cryptocurrency and managing my portfolio and helping other people understand how to approach the Web3 space. What we get into mostly is we talk about portfolios. We talk about their portfolios. Most people right now on planet Earth have stocks and bonds in their portfolio. Even young guys. Working with a guy, he's 21, he's in the construction world, he's all over his stock portfolio. But all the way out to the 50s, the 60s, the older people, they are well into stocks and bonds, and they have a big diversified portfolio, right? They're investing in all different types of sectors, tech, commodities even, and then bonds. So depending on the type of money manager you're working with, whether it's TD Ameritrade or Fidelity Investment, Vanguard, or your private equity, or you're just in a 401k, right? We all have an experience with stock portfolio, and it's such a diversified thing. And I don't have any stocks. I'll just say that right now. I don't have any stocks, and I never did. Okay, I was a young sort of entrepreneur myself, was never a part of a 401k, and for some reason I was always on the back burner with stocks because I felt like you couldn't make any money, to be honest. And this is what I want to talk about, okay? Because yes, if you have stocks and you have bonds, that's great. That's one thing. And if you're thinking about the cryptocurrency world, you have to ask yourself the question, well, what's better, right? What's better for my dollar growth? What could be better? If I'm putting $1 over here, where's it going to go? If I'm putting $1 over here, where's it going to go? And most people, what their comments is that if you put money into your cryptocurrency portfolio, it's going to go to zero and it's a scam and it's crazy. So it's totally safe in the stock. And that is just, in my opinion, not the case at all. It's not true at all. It hasn't been the case for me. Been in this space for over, going on 7 years now. And it's just not what I see. And I'm investigating and researching every single day, staying on top of the projects, protocols I'm interested in. And I think that if you did that same work, you would see eye to eye with the vision that I'm seeing. So don't take my word for it. Nothing in this video is me telling you that this is the absolute truth. It's just that stocks, to me, remind me of, now are they ever going to go away? No, stocks are always going to be here. But I would like to discuss a few concepts with you that you might not be aware of. And I wasn't aware of them until I started to talk to high net worth individuals and accredited investors. And we're going to talk about that. We're going to talk about stocks. We're going to talk about probably what you have in your stocks. And we're going to talk about cryptocurrency portfolio, okay? Because another topic is, well, man, I'm totally hedged out in stocks. So I'm working good in my life. I don't have really extra money to bring into the cryptocurrency world because I'm all in the stocks. Okay, we're going to look at all that. We're going to look at that. First thing I want to talk about is the stock market portfolio. Okay, so you have all these different stocks. You might watch financial channels that are on TV, or your parents watch financial channels, and they're talking about new stocks coming up, their top picks of the week, their top picks of the month. And it could be this new tech company. It could be, you could have traditional ones like Tesla and Apple and all these, or Berkshire Hathaway or something like that. And what I want to talk about is the accredited investor venture capital aspect of how this happens to where it then comes into a stock that you're going to buy once it becomes a public market. Okay. So basically what a stock is it is a company that is formed. It is formed probably at a local bank. Okay. Maybe a little idea by an entrepreneur. We'll take like Mark Zuckerberg, Facebook, right? Let's take Chipotle or something, right? Chipotle. A guy, let's take Chipotle. Dude built Chipotle, thought there was a better way to do the fast food scenario where you could have the ability to make your own, create your own burrito. So, right, you go to McDonald's, you're going to get the Big Mac, and it's going to have those pickles on it or whatever. You can't really change it that much. You could say no pickles or whatever, but for the most part, you're going to get that package. And so many people with all their different likes and dislikes, allergies and what have you, the Chipotle method was like you stand in line, right? You've been to Chipotle, you pick what you want. I'm going to get a taco. I'm going to get the hard shell. I'm going to get the soft. I'm going to get brown rice. I'm going to get the chicken and the beans and this and that. No sour cream today. Maybe the guac, some lettuce. Every time you come in, it's a little different. So it's wonderful. It's convenient for the consumer, right? And this is all to say that was a powerful business model. Now, many businesses copy that exact model. Like Sweetgreen is another one. Qdoba, lots of them. Even some pizza shops around, like Crust Pizza, where I'm at. You can pick the pizza, the dough, the toppings, the cheese, all that. It's great. It feels good. You get exactly what you want. And it's always different and fresh. So it has you coming back. Now that significance turned that business into a larger business model so that you can start branching out and creating more locations all over the place. And so he needed a bigger bank. And so he probably got bigger bank. And then once you get to this place where your bank and your revenue is getting up and up and up, you're going to need to go public into a bigger sphere of money and bank. And so then I'm really being very elementary with the explanation of this because I'm not here to talk about how businesses progress from like a mom and pop type of a thing that's scaled to a publicly traded company. But the gist of it is it works its way up through levels of banking, right? You and I have a bank, like a branch at the local corner. We have TD or Wells Fargo or some sort of bank, PNC. And that is like a branch bank. And then that's going to help you in your life with transactions up to like $1 million or something like this. And all of this, again, is something I didn't really know. I mean, once you pass $5 million of holdings in your bank account, the bank manager is going to call you and probably talk to you about upgrading to the private banking. Okay? JP Morgan, I was just talking with a bunch of JP Morgan guys last year. They are a private bank. And so they explain all this to you, and they're like, okay, now they can handle transactions from like 5 million to 20 million, right? So if you have less than 5 million, well, they're not really that interested in you. Go ahead and hang out at the private bank. If you're 5 to 20 million, well, let's talk, because they want to manage your investments properly in this other way. Now, once you grow past $20 million, see, you move out of that bank, the private banking, into this like conglomerate banking. Private banks go into public. Okay? And so this is how a company becomes public. Now, at that time, in the private equity world, the private bank world, your company, like your Chipotle at this phase, you're like, wow, I'm going to scale and we're going to take this thing national. Well, there's going to be a lot of venture capital. There's going to be a lot of investors. There's going to be a lot of hedge fund, venture capital, accredited investors that are going to get privy. They're going to become aware of your growth, and there's going to be a process for them to invest in that business that you have. They're going to buy shares of your private company. They're going to buy a big portion of your company, right? And you're going to be excited because there's all different kinds of ways that this gets underwritten and these agreements get made. Okay. Once they take you to this level, once you go through this level and you become a publicly traded company now, and there's a celebration at the New York Stock Exchange and they ding, ding, ding the bell. And people now, the public can come in, people like me and you. Now it gets back to us, right? The minions, the people, right? Not the venture capital, not the accredited investors. Okay, just people like me and you. Now we can buy shares of this stock. And who are we buying? We're literally buying it from the venture capitalists and the accredited investors who have invested in the seed round of it, the very infancy of it, and they're selling that to you, and they're making all this money. And so the rich get richer, and us, the people who are now buying shares in this beginning of company, we're thinking, oh great, there's potential here. But the reality is that yes, you might make some money here or there, but over time you just hold these stocks, and we just really don't know the system enough. Like, we really don't know the system. That's what I take away. We don't know about it as much because they don't teach you finance in high school. They don't teach you finance in regular schooling. College, they don't mention it. They dissuade you from it. They invent these terms that make it hard for you to understand. And unless you go to a financial path through college and beyond, you're really not going to understand the process. And this whole network of high network individuals and accredited investors. So an accredited investor has to have over $1 million of holdings. You have to be able to prove that you have $1 million worth of assets, not including your house. See, most people think that their house is their biggest investment, and it is for most of us. But you cannot include the value of your house. If you have $1 million house, you can't include it. But if you have a $500,000 house and then $500,000 house rental property, you can include the rental property, but just not your house, or cash, okay, or stocks or whatever. You got to be able to prove $1 million. I mean, so can you prove that you have $1 million worth of assets? Not cryptocurrency assets. We're just talking about stocks right now, and bonds, and real estate, or cash. And so unless you can do that, right, you are not an accredited investor that can partake in purchasing these stock companies prior to them becoming public. Okay, so that's the deal. They do that to protect investors, actually, right? I mean, if this guy's got $1 million in his holdings or more, then he has proven somehow in the world that he is able to acquire that kind of money. So that, or she, right? So that's the challenge, because it's hard to have that much money, right? I mean, I remember when I was being mentored, guy was like, raise your hand if you know how many people you know that are just, have, high net worth in their life. And I was just like, wow, I didn't really think of it like that. It's tough. It's hard. Okay. And so this process strings us along in our life, and we never really get to the place where we can surpass this, crack this maybe $1 million net worth type of scenario for ourselves. And we're dangled with the carrot, following through, hoping and praying. And we have no idea how these stocks are going to turn out later in life. I mean, I hear horror stories where at the end, especially at the end, something weird happens, your stocks fall, you almost lose your investments. And bonds are a whole other topic. We're not going to get into them. Okay, so what I'm trying to say is, over here, now let's look at the cryptocurrency world. Okay, so these cryptocurrency projects, they're decentralized. There's not a lot of regulation right now. Regulation is going to be a good thing. I'll say that 1,000 times because it's going to protect people. Okay, regulation is there to protect people, one, and two, it's there to help thwart anti-money laundering. Okay, AML, anti-money laundering. Okay, and so that's going to be a great thing. And so once regulation happens, and there are policies written, and there's laws written about how to regulate, then you're going to see all these institutions, all these venture capitalists, they're going to be able to pour into the market now. And this whole opportunity that I'm about to discuss will have passed, okay? And so they're hoping, I really think that they're hoping that you don't pay attention. You don't understand your opportunity now until it passes, and then it's just like the carrot stick kind of situation. But right now you can with $100 or $30, right? Again, not financial advice. I'm not telling you to take $30 or $100. You could take a small amount of money and put it into a cryptocurrency project. Now everybody thinks, oh, Bitcoin, 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 or Ethereum, Ethereum, Ethereum. And like I said, right, this channel is focused on Cardano. We focus on Cardano for thousands of reasons. 1,000 reasons, probably. I could literally talk about 1,000 reasons. There's definitely 10 that are just massive. And security is the number one. Security is massive. So Cardano is a very secure network. You want to be careful what you're doing, right? Obviously, because you don't want to lose your money. And that's the problem. See, that's why these accredited investors, if that accredited investor over there who's got over $1 million worth of holdings and is investing $100,000 into a project that he has no idea will fail or succeed and loses that $100,000, his life or her life is not going to change dramatically, and this person will survive and move on in their life. Now, if you only have $100,000 and you put that $100,000 in, now why am I saying that big of an amount? Well, because most of these seed investor guys that are doing it like this, in this seed round, investing in these assets, there are minimums of like $100,000. You must invest $100,000 or $10,000. And they're going to kind of look at you sideways if you say, yeah, okay, $10,000. It's more like $100,000. So there are minimums over here in the stock world, even when you're a venture capital guy or gal. Over here in the cryptocurrency market, there are no minimums. So you could put $100, $30, $30, whenever you want. You don't have to deal with a money manager. You don't have to deal with a private banker. You don't have to deal with a middleman or woman getting in the way and taking a fee, right? And managing this thing for you. You could just, boom, open up one of these little cryptocurrency apps. You know, you might have a Fidelity app and your Vanguard app, and you open up a Coinbase app or a Kraken app, and you do the same thing. And you're just kind of investing in these other projects at a very low round, right? Because a lot of these protocols are in their infancy. They have not had a bull run. Bitcoin is a bull run, had a bull run. Ethereum had a bull run. Even Cardano had a bull run. Two bull runs, Cardano. Okay, Bitcoin's going on its 4th bull run, right? It's coming up on its 16-year cycle. They've had bull runs, so they're there, right? People in 2009, 2008 were investing in Bitcoin when it was literally a nickel per Bitcoin. And so now you have Cardano that has had a couple bull runs, but there are Cardano native tokens building on Cardano. They are layer 2 blockchains. They're layer 2 protocols building on the Cardano blockchain, the layer 1 of Cardano, that have not had a bull run. So you could think what you want. You could take what I'm saying and research and investigate for yourself. And so that's what I would love to offer you as an understanding, right? If you're investing in a stock, it's a security. It's labeled a security, so it's regulated by the SEC. And the only reason you have that stock, the only utility, there's no utility with the stock, with a security. It's just you're hoping and that the price of that stock goes up. You're wanting to make money, and that's what a security is. So you're buying a share of the company and you think, oh, but I have a little bit of that. I own a little bit of Apple, right? I own a little bit of Tesla or whatever stock. And there are like lots of little unicorn stocks that, yes, if you could make a lot of money in the stock market, for sure. I'm also saying that, right? So I hope you're taking away that you're also able to make a tremendous amount of money in the stock market, right? I'm not saying that that's impossible. Just saying it probably is a lot more difficult. Could it be safer? Sure. Could be a lot more difficult? Sure. The jury is still out on this whole cryptocurrency dynamic, the whole blockchain revolution, the blockchain disruption of finance. Okay? It's my theory that every single company, like Apple and Tesla and all these, they will become tokenized for their own benefit. They will have to. Every company will become tokenized, and so the stock market will look like a relic of the past. Okay, it'll look like the rotary telephone, right? Remember the one that my grandparents had one hung up on the wall. This the little telephone that you put to your ear and you rolled it. It'll look like the stock market will look like Tetris. Okay, compared to some of these metaverses being built, right? It'll look like a dinosaur compared to the beauty of the tokenized assets now. And right there, so there's 1,000 reasons why I believe in that, and you should begin the process of understanding. Or if you're here and you're like, yo, you're speaking to the choir here, then good for you, man. Good for you, because you understand. So I'm just hoping that you can see a little bit here. Because if you take $100, and that's what I did, you just take a little bit and you cost average in every now and then. So you put $30 into the space and you select what kind of blockchain you feel you're passionate about that's doing good things in the world. Take $30 into that, and then you research that project, right? You're reading the white paper, you're looking at the team, you're checking out their social media. You're making sure that this isn't some rug pull, right? Some sort of scam. You're understanding, you're protecting the asset, you're creating a wallet, you're moving it off the exchange that you just bought it on, and you're putting it to a wallet, and you're doing research, and then you might put another $30 in because you did more research, and another $30 in because you did more research. And you cost average in because there's no minimums. And these tokenized projects, right? A lot of the ones, especially on the Cardano blockchain, there's a finite amount of these tokens. So you're getting a part of these tokens. You're buying some of these tokens that aren't securities like a stock with no utility. These tokens have an extreme utility. They have a large utility. If you're buying Cardano, ADA, it has a massive utility. Now we can go into hours and hours and hours of what that utility is, but you don't want to hear it from my mouth. You want to hear it from the Cardano white paper. So read the Cardano white paper and look at their utility. Look at what they have done. Look at all the other papers that they have written, scientific peer-reviewed papers that talk about their utility. So there's a utility to the token, and that becomes something interesting. It becomes something different than just holding this stock over here, right? Again, so that's what I'm saying. That's why the thumbnail here was like the horse. Okay, this is your stock portfolio. And this is like your vehicle of cash. Yeah, I mean, that's what we used to do. We literally used to ride horses everywhere. I'm outside of Philadelphia right here. If I needed to go to Virginia or something, we'd have to ride a horse. Honestly. I mean, that was it. And how long ago was that? Not that long. I'm talking like 200 something years ago. The city of Philadelphia had over 100,000 horses in it. Think about it. Everybody had horses. Until the vehicle came along. How many people back then were like, the vehicle, right? If you go in and look at articles about the vehicle, it's a scam, it's a death trap, it's this, it's that. It's never going to work. It's never going to be adopted. And so all the people just kept their horses. Kept their horses and kept their horses until what? Until they were forced, because of society's growth, into getting a vehicle. How many people right now have a horse? Everybody had a horse back then. Everybody. And if you didn't have a horse, it's probably because you couldn't afford a horse. So everybody's got a car today. I mean, except if you can't afford a car. Right? So think about it for a second. They were forced to move into the vehicle, right? And so that is the vehicle. If you're talking about vehicle for your wealth, do you want to be sitting on a horse right now? Or do you want to be in a supercar or what have you of your choice? It could be an electric car. It could be a Ferrari. Everything's moving electric. So that's the thing, man. We have to, in a way, in society, understand where the trends are moving, where the disruptions are happening. Was the automobile a disruption? Yeah, it was a disruption. It was a disruption. And so as the people started to get cars, all these non-believers stuck with their horses. And now, as the cars developed and they got better and today we go, and they're passing by people on the horse on the way to Virginia or across the country or wherever. These people sitting on the horses eventually were like, well, man, I guess I should probably think about one of those cars. But a lot of them just stayed with their horse all the way through to the end and never got into the car, never experienced the feeling of sitting on a car. Okay, just all their life bouncing around up on this horse. Never got the experience, sitting, the feeling of driving that car. Okay, so is that what you want to be like, right? Do you want to be a person that never gets the experience of understanding what it's like to be a part of something that is truly amazing and life-changing and disruptive? In the world of finance, disrupted. Okay? The internet's another powerful example. Prior to the internet, so we don't have to go back a couple hundred years now with the horses. We could talk about the internet. That was only 20, 30 years ago, 30-something years ago, when it really started to take off in the mid-90s. Okay, and that was a great time for me. I mean, I graduated high school in 2001. So in the mid-90s, we were like, what's the internet? I barely had a cell phone until junior, senior year of high school. We had beepers. So I've experienced so much life without the internet. And I think of companies. Look at all the companies that were operating without the internet. You didn't have internet. It didn't exist. Every single company out there existed with paper, and there was like awnings and buildings, and it was like location and yellow pages. You put your ad in the yellow pages. People read the newspaper. People looked at yellow pages. This is how you advertise your business, right? And then the internet comes on. And people are like, well, if you build a website, you can advertise on this website, and then you can also advertise on the internet like Google. You can advertise on these platforms like YouTube that are coming up, and there's this Facebook thing, this MySpace thing. You can advertise there, and people are like, yeah, right, that's absolutely crazy. No, I'm going to take another ad out in there in the yellow pages. Okay, great. And what happened? Who right now, what kind of business right now do you know that sits there and is taking out ads in the yellow pages? Right? They were forced. Right? They eventually had to move into building a website for their business. Social media, marketing, the whole 9 yards. The website just doesn't cut it anymore. You have to progress because you'll get left behind like you are sitting on that horse. So they had to adopt and submit to the Internet of Things, IoT, and a whole tranche of businesses came out of that. Apple and Microsoft and Dell and HP, PayPal. The list goes on and on and on. Right? Tesla, you talk about Elon Musk. You know what Elon Musk got his money from, right? He co-founded PayPal with Peter Thiel. And they sold that bad boy for billions. If it wasn't for the internet, what would they have done? So that was a wealth transfer that occurred. They saw an opportunity. Elon Musk who no one knew who he was. No one. And Peter Thiel. Who are these guys? No one knows. They invented some stupid thing, PayPal. Yeah, okay, well, it eventually proved to be something significant for society. And they were able to sell for billions of dollars and fold it into all these other ventures in their life. And now you know who Elon Musk is. So there was a wealth transfer that occurred in the internet. There was a wealth transfer that occurred when the automobiles came here. Henry Ford, right? He was not like a wealthy household name when he was thinking about building the Ford Model T or whatever, right? If anything, people thought he was absolutely nuts. And so is that exactly how it looks right now in the crypto world? These people are crazy? Yeah, and were there cars? Go ahead and look back then. Were there other cars that were also building that don't exist anymore? Sure they are. There were cars that sucked, that were during the time postured up to be the greatest car ever. But they didn't make it. You don't see those cars right now. But if you do some investigation, you'll find a tremendous amount of brands of cars that just didn't make it. Ford made it, Chevy made it, Dodge made it. But a lot of these other brands didn't. Internet. I'm just taking these two. Okay, yeah. Were there a lot of internet brands that didn't make it? Sure. But a lot did. And here we are, cryptocurrency. Are there a lot of these cryptocurrencies that are going to totally fail? Of course. They're failing all the time. That's why you have to understand what you're doing. But don't let the fullness of this maybe scam type sentiment that maybe the people around you are talking about fool you from understanding the truth of the direction society's moving, like the internet. So just as every single company now needs a website, needs an interface like that, had to adopt it. I'm telling you, I'm sitting here today, I'm just saying that you could hold me accountable to it because here I am putting this out on a video. It's my belief that every company will be tokenized, will be interfacing with a blockchain. From small mom and pop businesses in your local community to the largest corporations in the world, to the biggest hedge funds in the world, to the governments of the world. And you're like, governments, oh my God, how can you say that? Well, does the government right now operate on the internet? Does it? Does it have a website? Does the government have a website? Do they live stream their congressional hearings? That's all internet. So yes, the governments adopt also. Okay, so where's your portfolio? Is it over here on the horse? Or are you in the new age car here, the new vehicle? And are you going to be sitting on that horse and watching people fly by you with their portfolios? And are you going to take that all the way through and be stubborn all the way through to the end? Or are you going to get off that horse? You can still have a horse, right? Great to have a horse. People have horses now. They have ranches with horses. You can still have the horse. Ride around on your horse. It's fun. It's actually a really tremendous thing if that's you, right? But you also have like a nice little whip in the garage ready to like take you to town, right? Do you want to sit on that horse and go all the way through to the grave and not experience what it's like to sit in the new vehicle? And I'm not telling you to completely take every single thing you have and put it in cryptocurrencies. That would be absolutely insane. I'm saying look at it a little bit. Just check it out. See for yourself, because there's opportunities that were never here before in prior history, in humanity itself. So is this a disruption? Sure it is. Could it be the biggest disruption that humanity has ever seen as far as industry and technology? Yeah. Oh yeah. That's my view. Especially with AI and everything else coming out. I do believe that. Because without blockchain, you really can't have AI without blockchain. So think about that too, because AI is all the craze right now, and blockchain is kind of like down here. Think about it. Okay, so get off the horse. Get off the horse to at least see the lot. Go to the vehicle lot. Tie your horse up, go to the vehicle lot and just check things out. You can get back on your horse and drive home on the horse and hang out with your stocks and your bonds, okay? But just look at it. Just look at it, and that's it. And then finally, closing, it's up to you, right? It's not up to me, and I'm not trying to influence you. I'm trying to just present different views of opinion, okay? So I hope you the best of luck. I wish you success in your ventures. I wish you success in your portfolio. And there's so much to do. There's so much to do to diversify. Because people will say, well, are you diversified? It's like, yeah, there's a lot amount of diversification. Well, all you care about is Cardano. No, well, that's the layer one. And so there's so much to diversify within Cardano. Okay, so there's a lot of diversification. There's AI, there's metaverse, there's DeFi, there's gaming, there's telecommunications, all within Cardano. So maybe diversification comparison might be the next video. All right, you let me know. Shoot me an email. Head over to Crypto Fluency. Shoot me an email. Check it out. And we'll see you soon. All right, so stay strong.